All right, stocks 5150. Today I have my chart pulled up and I'm going to talk about options Greeks, right? Now, with options Greeks, some people use them. These are the things up here. You got vega, IV, rho, gamma, delta, theta. These are the main ones, the main four that you use. There are other ones also. So what we're going to do, I'm going to explain these and then I'll show you how the ones I use, okay? No expert, it's just what I know. So strike price. If you look at here, your strike price, this is the target price that you think the stock will go to. Like you see here, price of Tesla is 421.06. So strike price, if I think it'll go higher, I do 422.50. You see what I'm saying? This is out of the money. You can go as far down as you like. You can go all the way down to a penny. Then you have in the money, which is the shaded area up here. Anything that's above or below your stock price is in the money. It's already making money. Anything that's below it is out of the money. All right. So that's what the strike price is. The bid is if you were like, this is the price that you're willing to pay for this option, for this strike price. So we'll keep it at the 425. You're willing to pay 11.45. That's the bid. That's what somebody is bidding on that position. The ask is what whoever is holding that contract is willing to sell you that contract for. They're asking $11.95. You're willing to pay $11.45, and they're asking $11.95. The last trade is always most times somewhere in the middle. It's $11.60. So the last time that it's sold, the last contract was sold for $11.60. You see? Theoretical value, that's how much this one right here is a mathematical calculation that they do. And this is how much this option strike price is worth, $11.70. This keeps you from being too far, like if the prices get all crazy and stuff, you just know this is worth that. So you shouldn't be too far away from there because you can see here the last trade was $11.60. They want $11.95. They're trying to make some money. You understand? So that's what it's all about. All right. Now we're going to get over here into our Greeks. The first Greek I have up on this list is Vega. So with Vega traders use Vega to gauge how the changes in the market volatility will impact the value of their options. So it's like checking how massive the waves are when you get ready to get into a boat. You know what I'm saying? So you want to check the temperature, see if everything's okay. So that's what Vega does. Okay. Then you got implied volatility. Implied volatility and Vega, they're different measurements of volatility. Implied volatility reflects the market's expectation of the underlying assets' future volatility over the life of the option. You see what I'm saying? So implied volatility also increased implied volatility suggests expectations of significant price movements. So like if the IV is high, then it's an expectation that the price will probably go up, So something like, something like Tesla. We're in Tesla right now, and you see the IVs on these are high, 50 and all that stuff, right? Okay, so if I type in, I don't know if it'll load or not, but let's see. Well, if I change this to something like SPY, let's see, turn it to SPY. SPY, this is the S&P 500, okay, it loads up. That price is sitting at $5.91. That's how much the last trade. That's what it was. So we go here, $5.91. Okay. And the implied volatility for $5.91, you see, it is 13. You see the difference in these though? These are down in the teens. Because the implied volatility is not a huge expectation of the price changing versus Tesla, which has crazy potential in swings. Like Tesla's a swing 40, 30, well, most time moves $6 to $10 in a day, but lately it's been moving $30 a day. It's been crazy, but implied volatility is high. Also, when implied volatility is high like this too, the premiums are higher. Like if you go back here and we look at SPY, and we'll look at something like you see, so it's $5.91, and we go to $5.91 right here. And you can see these prices right here. These strike prices, $5.91 strike price is only $400. You see, that's right there. One outside of the money is $300. Okay, versus, and this is on the same date, December 27th. So that's a week out. Tesla, on the other hand, and they only have weekly options with Tesla. And if you look at this, Tesla, one outside the money is $1,200. So it's almost 3 times as much. So the IV has a direct effect or a correlation with that. The higher the IV, the higher the option price is going to be. But you got a chance to make money, you know. Next on the line is the total volume. Total volume is just what it says. It's the total volume. So think of this just as buyers and sellers, because this is a market. So the total volume is the amount of people or contracts that are in this. This is, so 425, you got 11,559 people. That's, or I'll just say people or contracts in there, and that's the volume that's running in that. You know what I'm saying? So you want to get one that has a lot of volume with it, because it's a higher chance that you'll be able to get in and out of it and make some money. Like something like this one right here, that's 412.50. Not much volume. I would stay out of that. You get up here into the money, super deep into the money. This is that Nancy Pelosi and them. This is what Congress and all those cats are doing. Look at that, 19. But that's so far in the money, that's crazy, you know. But that's them, and that's how it goes. So anyway, that's what total volume is. So the next one on our list is Rho. Rho has to do with interest rates. So Rho measures how sensitive an options price is to change to, you know, like treasuries and stuff. It's Rho is expected to change in the options price for a 1% change in interest rates. I guess this would be important if you were trading like treasuries or something like that. But you could use it to determine the potential impact of the interest rate changes on the options positions. You know, I mean, like if you're doing something like a leap, like a long-term option, like something that's way out. And when I say a leap, I'm speaking, leap stand for long-term expiration, something, I don't remember it. But anyway, don't give me any line, I'll do another video on it. But if you go out further, like May 2025 and stuff, let's see what this changes, if this row changes. So right here, 425, the row is 0.025. 0.025. We'll go to May. And 425, let's find 425. They don't even offer that one. But we see here the row, see the interest rate went up. It's 0.7. All right. So the further out you get, the higher the interest rate. All right. Gamma. Gamma. Now, some people use gamma because they do gamma squeezes and stuff now. It's all kind of tricks the market uses to make money. They run the market up with gamma. So anyway, gamma is the Greek that measures the rate of change in the options delta relative to the movements of the underlying asset. While the delta is a snapshot of the current speed of your options value, how fast it changes and stock moves, the gamma will tell you whether it's picking up speed or slowing down. See, so gamma is the highest the closer you get to at the money options. When a small price change more greatly affect the likelihood of finishing in the money. So you can see here, where is this at? The gamma on this one is 0.014, right? 0.014, and the closer you get to in the money, see, the closer you get, that's higher. You see, so the further you get away from it, the gamma is lower. Either way, even when it's in the money. But the further you get away from being in the money, like the strike price, the actual price of the stock, the closer you get to this 421, the higher the gamma is. Delta. Delta is the one. Delta is the one that I think everyone knows. Or if you trade options, you know what delta is. You know what I'm saying? Delta is the one. So delta is a measure of the sensitivity of the options price to changes to the underlying asset. So for call ranges, like so look at it like this. This is how much it'll move. So for think of it as dollars, right? All right. So right here, this is a 0.49. This is like 49 cents. This is a 0.53. This is like 53 cents. So for every dollar that this moves, that the strike price that this moves, this will move 50 cents. If this goes up, this piece right here, this strike price right here, 402.50, this one goes up 76 cents. That's why you get, like I was mentioning, like Nancy Pelosi and them earlier. Up here, you buy an option and it's this far in the money right here. See, this will cost you $6,500. right? But you purchase this one right here. This gives you control over 100 shares of the stock over $6,500, which is still cheaper than purchasing the stock. But for every move, this will give you 96 cents if it goes up. That's how you make the money. You just got to have the money to make the money. If you're deep in the option, deep in the money, you can make some money if it goes your way because you're banking off of this. Down here, where the regular people stay, around here in this 50, 40, around here, 30 cents, you know, you might get a little bit, but that's why you spend more money and you can make more money if it goes your way. You just got to make sure you choose the right direction. That's the most important thing with Delta. So if you choose an in the money call and you get 412, the price is already, so it's already above that. 421 is what the price is. So every dollar that this goes up, you'll make 63 cents. You see what I'm saying? So the higher you get, but this position right here, 412.50, it's going to cost you $1,900. You understand? So you spend $1,000 and you'll make maybe 600. Maybe you'll make 600, or it'll go against you and you'll lose. But we'll see how it goes, right? That's what trading is all about, man. All right. So last but not least is theta. Theta is my nemesis, man. Theta. Whew. Theta, you see it's in a negative. The reason why theta is in a negative, because just like life, time is always counting down. So the longer you're in a position, it counts down, and that's how the theta works against you. So just like Delta, you can make money with Delta, you lose money with theta. The further you are out, the higher the theta. So let's go to like this. Okay, so 422, 420. The 421, it's a negative 1.184. All right, so we'll go to January 10th. We'll look at this 420, same price. Look at this, we'll go over. And the theta on here, 0.67. See, so the lower it gets, the further it out, the lower the theta gets. That has less effect on you. The closer you get towards the option expiring, like as you move closer, then the theta increases. So we can look at this better and see it in relation on a SPY one. The SPY has weekly options, daily options. So you see here, this is for the end of the week, December 27th, right? This 5, let's find something I can remember. 584, 585, 585. It's a 0.33 right now, right? So we go here to December 23rd. 585, 0.09. You see, it's counting down. It's running out of time. And everything, far as theta goes, expires worthless. All options expire worthless if you're out of the money. Theta counts down and it eats away at your premium. It also, this is taking away at your premium too. So like if you like to keep options, you're doing long terms and stuff like that, or you're keeping them over the weekend especially, bro, it's eating away. Like I got some right now that I'm holding. I'm actually in some options right now for December 27th, and theta is eating away at my premium as we speak. This negative is taking this away. That's how much it's going away every day. I mean, the game is the game, right? So we're going to leave this on the calls. All right, so that's it. So I just explained to you the strike price, the bid, the ask, last trade, theoretical, vega, IV, total volume, rho, gamma, delta, and theta. Now, you say, stocks 5150, how do you trade, brother? What do you use? Well, here we go. We select columns, and we're just going to start going down the list. We don't need this vega, not interested in that. IV, not really concerned about that. Rho, definitely not concerned about that. Gamma, don't need to know about that. Theta, I already know. Time is killing me. I don't need to watch that. Now, delta, I keep. There's something else that I'm going to add over here to the left. I'm going to add open interest. See, I didn't speak about that because it wasn't there. Open interest and total volume. Okay, so open interest and total volume go hand in hand. And I'll explain more about that. So delta, I want to pull that up because I usually go off of my delta. So I'm going to have it listed now. It'll be my strike price, my delta, my bid ask, the last trade, and the theoretical value, and the total volume and open interest. All right. So, okay. Voila. It's updated. So we'll go back to Tesla. Oh, man, this thing ain't loading for me now. Oh, it's trying to connect. Good grief. Trying to embarrass me on this video. Oh, it just did it. It just did it. We'll go here and look at this one. While that's trying to load. Nope, I don't have any options. It's connecting. This is after hours, so I mean, I can't be mad at it. But we'll just say it like this. Open interest, what that shows, open interest and total volume, I use these two right here, these two columns hand in hand. Because say over here, if this says 1,000 on the total volume, open interest shows 500. That means it's 500 people that are interested in it. So the higher the open interest, those options are more, they look better for me. You know what I'm saying? So if I look at it like, let's see, make this bigger. Like you can see here on this one, you see the open interest right here is 3,000. See in the total volume? So it's 3,000 people, almost double the amount of volume that are interested in this strike right here, 387. You understand? So I use, and this one is set up better too. You can see in the money, how it's shaded. This is how it actually looks. So like I said, I use the delta, the ask, and the bid. This is on this screen. At theoretical price, I just added that in there because I'm going to try that out next week. See how close I can get. Any little edge, it really ain't no edge, but I'm going to try. So anyhow, open interest is important, just like total volume. All right? Because you want to be able to get in and out of the contracts. It's like liquidity. You know, you don't want to pick something that it doesn't have much open interest and say like this one right here. Look at this. This has one, and you got 37 people, 37 that are interested, but you only got one contract. And that's that one right there. So why get into that? Because you might not be able to close it out when it comes time to get out of it, you know? Because you don't, unless you want to purchase these contracts, normally you don't let them expire, but you sell them. You buy them and sell them. Very rarely do you hold an option to expiration. Very rarely. I mean, I don't think I have done it, but it's only because I'm chasing. And I just let it run all the way to 0. And that I only do that if it's a put or something. Because I'll let a put run all the way down, you know. Yeah, I'll let a put run all the way down. Because a put, it'll expire worthless. And you don't have to worry about getting the options call. That's a whole nother thing and a whole nother beast for another day. Why is this chart all over the place? Let me set this stuff up right. Everything is out of order. Huh. Yeah, I don't know. Well, taking time up on the video that I'm doing, but still, I don't like how everything is not lined up for some reason. All right, that's it, man. So anyway, screen froze up and it didn't reload my option orders and stuff. But these are the ones that I use. So at closing out, I use the strike price, the delta, the bid, the ask, last trade, theoretical value, and the total volume and open interest. That's what I use. So that's what we got. Stocks 5150. You see that, man? Lost connection and stuff. That's the when you trade, you want to have your computer, your monitor, whatever. You want to hardwire it because you lose connection with the Wi-Fi, man. I'm not at home right now either, so it really kind of don't matter. But yeah, definitely, this would suck if you were in the middle of a trade and then you lost connection and you like just watch your money go away. And it could happen. Anyway, stocks 5150, man. We out. Sorry for the long video. Actually, I'm not sorry. The stocks are crazy. Peace.